All right, guys. So I want to reiterate that bumping the stop loss up theory. So this is SPY that we're looking at today. This is a trade that I took earlier. So first, we're going to identify our support and resistance. So this line right here is clear support. It bounced, it bounced, it bounced, and went on a nice run. So I was looking at this level when it came down over here. I was in the 442 put. It was trading at 443.50. What I've been doing lately is looking for those cheapy contracts that can basically move pretty good if we get a trending day. You don't know if it's going to be a trending day. So if you go too far out of the money, you're in danger of losing all of the premium. But it's kind of a method I've been doing lately that I'm comfortable with. And I don't trade a size where if it lost it, it would destroy the account. So I was looking at this level of support. When it broke, it became resistance. So how do you manage the trade? Here's what we're going to do. We're dropping, we retrace. We didn't get back to where the support level was, so we're going to stay in the trade. We're dropping, we're retracing. So on these retraces, we can put a line there, and that's going to be our stop loss. So if it breaks above this level, we're going to stop out. You can see it dropped again, and it retraced a little bit before dropping again further. So what we're going to do is bump the stop loss to where it retraced on the latest drop. So we're going to go ahead and remove this one. So we dropped, we retraced, that's where it stopped. We went on a lower low. So if it got back above this level, we would close out the trade. But it didn't. It made a retrace and then another lower low. So what we're going to do is add a new stop loss up here where it retraced here, and we're going to delete this one. We went on a newer low, and then we retraced a little bit again. So what we're going to do is add a new stop loss here, and we're going to eliminate this one. So you can see as we come down, we retrace, we come down, we retrace, we come down, we retrace. What we're doing is protecting all of the profits with each of these new levels. So it's consolidating here, we're dropping further. So let's see what that contract is. 442 puts. So let's go ahead and grab that one. If I can grab, this is the chart for the 442 put. You can see this is the support and resistance level. Earlier of the day, that contract was running at 60 cents. I actually got in at 71 cents. So my fill was somewhere up in here. So we have the stop loss at 84, and then it would have been bumped up to 132, 133, would have been bumped up to 155, would have been bumped up to about the $2 mark. Actually, no, it would have been this level here. So 155 or somewhere around here, 150, 166 is what that looks like. So that's the low point there. If it breaks below this at 166, we'll get out. As long as it keeps making higher highs and higher lows, we're going to stay in this trade. So let me get rid of that and go back to the actual SPY chart. So again, it's consolidating here. If it gets back above this level, we're going to close out that trade. If it makes a new lower low and then retraces, we're going to move the stop loss further down to protect more of those profits. So that's a method you can use to protect your profits. You're not going to get out at the peak, but you're going to protect profits because, again, as I showed you yesterday on Twitter, if we make a higher high, that breaks the trend. So a downtrend is defined as lower lows, lower highs, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So the first point where we make a higher high, that downtrend is over. Now, again, it could make a higher high by just a few points or a few pennies and then drop further. But the downtrend is defined as lower lows and lower highs. So once we make that first higher high, the downtrend is technically over, even if it's short-lived. So that's where we're going to protect our profits. Because in the event that it's not short-lived, like over here, we made a higher high, look what happened. So if you were short here and you gave all of that back, if this went on to make a higher high from here and a run, you would have lost all your profits and then got into a big loss. So we don't know if it's going to be a shorter term trend break or if it's going to be a complete reversal. So we're short here. The first sign of a higher high is where we're going to close out that trade and protect profits. And what the trade does after that We just don't care. It's not our trade anymore. Once we're out, lock in those profits.